Having bad credit can also affect your chances of being able to be hired. And so, a lot of times, what we assume is that having good credit is only important if you need to get an auto loan, if you need to get a credit card. But a lot of times, people forget about the employment aspect of having good credit. So, we'll be discussing that in this video. But before we get into the topic, if you could like, comment, and subscribe if you enjoy the content, but we'll go ahead and get right into the topic. So, when it comes to credit, uh, a lot of companies will be looking at your credit profile, especially if they are in the financial industry. And one of the most common mistakes that I see is that people will assume it's because that they don't work in the financial industry that their credit isn't going to be checked. But you could be an administrative assistant, you could be an IT manager. It doesn't really matter about your position. What matters is what company you're applying to work for. And so a lot of these screening platforms, they will do a credit background check on you. So if a company is doing a screening check, a lot of times they will also be looking at your credit score as well. How do I know? Is because I actually use it myself. I use a platform called Mints. And so we're able to see a potential candidate that we want to hire. We're able to see their credit profile, and based on that information, we could choose to say, hey, we don't want to move forward with that person, or we want to move forward with them. And you may say, well, that sounds kind of stupid, but your ability to be able to make payments back to your creditors says a lot about you. How are you with finances? Are you trustworthy? Your credit says all these things. It sends so many different messages. And a lot of employers don't want to employ individuals that can't manage their own money. Okay, especially if you work for a bank. So you could be an IT manager at a bank, and they still may have certain requirements around you having good credit before they would even consider you. All right, and that's because a lot of these institutions have policies. So that could be a bank, it could be an insurance company, it could be any company in the financial sector. They can do that. Or it could be a small business owner, someone like myself, where again, I use these third party platforms so I can look at a potential candidate's credit report and make a decision. And so you have to say, okay, me having good credit isn't just about me being able to get an auto loan, but it's also about my employer, or if I eventually want to change careers or get a new job, that may come into play. A lot of times people overlook the impact that credit has on your ability to get a home, especially in a city like Montreal or Toronto. A lot of landowners or a lot of renters that are renting out their property to individuals, they are looking at your credit report. And the reason why is because on a consistent basis, every single month, they need to depend on the fact that you will be able to pay the rent because they have a mortgage to pay on that property. And if you cannot be trustworthy enough to pay that rent, then they are not going to even allow you to step foot on that property or even to sign a lease, right? So again, having good credit isn't just good from the standpoint of you being able to acquire liabilities, but it's good from the standpoint of you being able to get a good job, a really good job, because even at higher levels or positions where they pay a lot of money, they are going to check your credit. It's just the fact of the matter. Um, Having a nice place to rent, if you want to live in nicer areas, a lot of these landlords will be doing a background check on your credit. Again, it's a business at the end of the day. All of these things are extremely important. Some insurance companies, when they are creating a policy for you and they're trying to decide how much they're going to charge you, they're going to be looking at your credit profile. Okay, there's a lot of studies behind insurance that show that people that are in a bad financial situation, they tend to do more physical harm to themselves, unfortunately. But again, your credit plays more than just you being able to acquire um, liabilities. Okay, so what do we need to do? We need to be responsible. First, if you don't have a budget in place, that's the most important thing. You need to have a budget in place. Even if you don't know how to create a budget, there's so many free platforms online. One that I always recommend is Dave Ramsey's free budget tool that's available. If you don't feel like doing that, you can go to ChatGPT, you can go to Google, look up a bunch of different free budgeting tools that you can use. And it's going to be extremely hard at first, but you will never have good credit without having a budget in place. Now, the cadence that I recommend on how often you're budgeting is once a week. okay, once a week. And I'm going to be completely transparent. Again, in the beginning, you're going to suck at budgeting. You're going to be terrible, and you're not going to have a good, accurate idea of how much you actually spend. So when I first started budgeting, one of the biggest issues that I came across is that I couldn't get the number down for how much I actually spent on groceries. And it's really a range for most people. Some months you may spend more on groceries than others, but you want to be more, you want to lean more on the higher side of spending when you're trying to figure out how much you spend on those things such as groceries or gas, because sometimes you may spend more money on gas in certain months. Maybe you commute to work. You need to consider all of these things. So have a budget in place and know how much money you're able to save on a monthly basis. If you don't have a budget, you shouldn't have a credit card. It doesn't make sense, because what a lot of people will do is that they'll assume that they are able to stay on track with their finances. But eventually what happens is they'll end up with 2, 3 credit cards that are maxed out. And now they're just falling behind on interest. Okay, so the first step, I'll reiterate, is having yourself a budget. Second, we want to ensure that we're making on-time payments to our credit accounts. We should never miss a payment on any of our accounts. As soon as you miss a payment on one of your accounts, your credit score can drop up to 100 points. Now, again, this varies, but a late payment has a huge impact on your credit score. And the reason why is because it makes up a huge chunk of our credit score, which is simply 35%. Second, we want to make sure we keep our utilization extremely low, ideally below 10%. Now, if you've been on social media, you'll constantly hear people say keep your utilization at 30%. We are trying to be in a position to where we have great credit. So it's going to take you doing more for you to have great credit. So ideally, at least 10% or less. I always recommend being even below that. If you can keep yourself down 1%, that would be ideal. But I understand, you have some things that are probably going to stay on your report or on your balance. So ideally 10% or less for utilization. Utilization makes up 30% of your credit score. These things matter. Good credit, if you're curious, a lot of these institutions, especially when it comes to hiring, they want you to be above a 650. In my honest opinion, that's not a great credit score. Ideally, you'd be above 680. I would even push it to 700. A lot of landlords, if they see that you're below a 700, they may kind of start trying to look deeper into your credit report to see what's really affecting your credit, to see what is it that you're not able, what you're not doing. Again, I want to harp further on this utilization. If you're carrying a high balance on your accounts, that's telling that landlord, that's telling that employer that you are struggling, that you're drowning in debt. And so if you're drowning in debt, you don't have the funds to maybe pay for transportation that week to get to work. You don't have the funds to pay for the rent for where you're currently living. And so it's all about the message that you're sending. If you have a bunch of inquiries on your credit report, what message are you sending? If you're applying for a bunch of different credit products, then you begin to look desperate to these lenders. And so the biggest thing is your credit is so much more. This is the message I'm trying to convey. Your credit is so much more than just your ability to get an auto loan or a credit card. It plays a huge role in you being employed. It plays a huge role in you having a place to live. It plays a huge role in a lot of situations, your insurance policy. So I think it's important that if you are below a 700 credit score, you need to take your credit extremely seriously. If you need help with your credit, my company is here to help. You can always send us an email, info@kennyjohnsonuniversity.com. And until next time, peace.